How to generate profits when you expect limited upside for your assets. On Divergence, this can be done by having a long asset position and selling a binary call. We'll explore how you can do that in this tutorial. Let's say you own 1 Ether. Your profit or loss is linear. You get the price difference to your entry at the time you sell it. If you fund a Divergence pool with one stable coin like Tether, you are selling a cash or nothing call. At expiration, if the Ether price is below your strike, you get to keep the premium. Otherwise, you lose the difference between 1 Tether and the premium you collect. Now, let's see what happens when you long 1 asset and short 1 cash or nothing call. Suppose your cash or nothing call has the same strike as your asset entry price. Your asset position will be underwater if the price drops below your entry, but you get paid by your short binary call position. When the asset settles above the strike price, your asset makes you profit. You lose a fixed amount of cash in your short binary call position. Unlike selling a standard call, your risk in selling a binary call is limited. Sometimes the risk reward is better when you sell a binary call at a strike above or below your asset entry price. Also, if your asset keeps losing value, you can sell a strip of binary calls at different strikes to make up for the loss. This can be used as a hedging strategy. Anyways, let's remind you that options trading involves risks. This is not financial advice. We hope to see you soon trading on Divergence. If you have any questions, you're welcome to come ask in our Discord or Telegram. We are happy to help.